Hey everybody, it is CQF, and today we are going to talk about the MACD. I'm going to teach you what the heck it is, how to trade it, how to calculate it. It is an important indicator in the technical analyst arsenal. So if you want to be a decent trader, you got to understand the MACD. And just to let you know, it is not a Big Mac. Although whenever I see the MACD or say it out loud, for some reason I always think about the Big Mac. To be honest, I actually hate McDonald's. Anyways, let's jump right into it. So what is the MACD? So as you would suspect, it's an abbreviation. It is the Moving Average Convergence Divergence. And this indicator is very important because it can help you identify momentum and potential reversals. Now, I made a video earlier about exponential moving averages. The MACD utilizes quite a few exponential moving averages, so watch that video first. And the MACD is pretty simple. It's just a 12-day exponential moving average of a stock's price minus the 26-day EMA of the stock's price. Now, that's standard, although you can customize the horizons, but it's always the short-term EMA minus the long-term EMA. However, a trader simply does not use just the MACD. It comes in three main parts on a chart. So it's the MACD, the signal line, and the histograms. The signal line, is the 9-day EMA of the MACD, and the histogram is a bar chart or an area chart of the MACD minus the signal line for that day or that period. So one way traders take advantage of the MACD is to identify momentum, and the very basic way to do that is center line crossovers. By center line, that's the zero line in the MACD section of your chart. So if the MACD is crossing above the zero line, that means the short-term EMA is greater than the long-term EMA. The short-term EMA is moving up faster than the longer-term EMA. As an example, that's bullish. If it's the opposite, it is bearish. The downside here is a trend might not be fully developed here, and you might actually get whipsawed if you're in a ranging market. Now, if you want to get a little bit faster in terms of identifying trends and potential reversals, you would do what they call signal line crossovers. So here, instead of the center line where the MACD crosses the center line, you're looking at when the MACD crosses the signal line. So if it crosses above the signal line, that is bullish. If it crosses below the signal line, that is bearish. It's definitely faster than the center line crossovers, and there's certainly risk here. You can get whipsawed without a doubt. And it also gives false positives in the extremes quite often. So for example, you have very high positive momentum, so the MACD shoots up, and over time you still have positive momentum, but it's slowing down. You'll actually see a signal line crossover eventually, but you're still experiencing positive momentum. It's just not as strong. So you can be riding a wave of momentum and trying to short that, and that would not be good. And now divergences. We talked about this a bit in the RSI video, but you can also have divergences here with the MACD. This is actually, I would consider, the first potential spot where you can identify reversals utilizing the MACD, but you also get a lot of false positives here, especially if you're in a long-term trending market. For example, if you're in a very bearish market, a long-term downturn, and you spot a bullish divergence, you need to proceed with caution. So what is a divergence? So here on this particular chart on your screen, we're looking at a stock that is producing lower lows. So it is in a downturn in that kind of June to July range. But if you look at the MACD, the blue line, is actually increasing. It's producing higher lows. So bullish divergence would be lower lows in price and higher lows in your indicator, in this case the MACD. As with most of my technical analyst series, I have a free tool for you guys. Again, it's absolutely critical before you utilize any indicator, you understand it and you can actually calculate it. If you do not know how to calculate it, you cannot possibly be able to trade it. As with really any indicator, MACD has its pros and cons. It's best utilized with other indicators to build a mosaic for your trading strategy. So let's hop in and take a quick look at the free tool. I'll have the link here in the description, and feel free to play around with this as much as you'd like. So again, if you do not understand EMAs or exponential moving averages, watch that video and check out that free tool. So here we have a stock, about 1,000 days worth of prices. Again, it doesn't have to be days, it can be hours, minutes, whatever you'd like. But here we have 1,000 days with closing prices. So the 12-day EMA we have right here. Just to recap real fast, the first period in an EMA is the actual simple moving average, just the basic average. And then the very next period is when you begin your sequence for your exponential part of your series. You can see the formulas here. I don't necessarily need to recap it, but the main part here, if you look on F3, that's the multiplier. That tells you what the weight is for the most recent observation. So you can see, just doing basic math here, 15.4% is definitely a higher weight than if you just had 12 days equally weighted. Either way, you have the 12-day exponential average, and then in column G, exact same methodology except 26 days. So the MACD is simply the short minus the long. Pretty easy, right guys? And the signal line is the 9-day EMA of the MACD. So what's actually interesting, kind of a drawback, is here you actually cannot actually produce a true MACD chart with a signal line till 35 days, because you need 26 days for long-term EMA, and then you need another 9 days to produce the signal line. That's just a FYI. It's kind of interesting. Maybe you knew that, maybe you didn't. And then over here in N is simply the histogram portion of the chart, which is J minus K, the MACD minus the signal line. Over here we have basically what a MACD looks like. I'm not a Google spreadsheet expert, so I kind of rigged it a little bit here. But the top part, you have the blue line, that's the MACD, and the red line, that's the signal line. So just to recap some things that we talked about, if the blue line crosses the red line going up, that is bullish sign, like I am circling right here. If the blue line crosses below the red line, that is a bearish sign, as well as the center line cross right here, that's bearish. The center line cross right here is bullish. This actual signal line cross here is bullish. So you can see crossing the signal lines occur before the center line usually, so it's a bit quicker, the ID potential trend reversals. Then down below you can see the histogram. Here I have an area chart, it's a little bit easier to see, but that is simply the MACD minus the signal line. So guys, if you enjoyed this video, definitely subscribe. Follow me on Twitter at CryptoQF. Like, comment. I'm happy to answer questions. Good luck trading out there.